So now let's move on to our next session of the day, that is post-COVID era, so moving from offline to online. Is this here to stay? So the moderator will be Tanya Naik, Head of Online Business, Plural by Pine Labs, who's joined by Shamvil Raza, Business Leader Simple, Singh, Head of Payments Zomato, Anujai Saxena, Chief Transformation Officer, Punjab National Bank, Housing Finance. So I would like to welcome all the panelists on stage. Please welcome our panelists with a loud round of applause. An applause, please.
Okay, hi, good afternoon, everyone. Let me begin with a little bit of context over why we chose this topic and some statistics to start with. Today, over 26 crore transactions are processed digitally in India on a daily basis, of which close to about 2/3 of it is done via UPI. There are so many fintechs today who have moved beyond payments and exploring ways to modernize financial services as a whole. Digital payment companies today process over 50% of online payment gateway transactions in India alone. So the opportunity is out there for everyone to see. Obviously, data is being used as a new revenue source for so many digital payment companies to innovate on top of it and provide intelligence to merchants and consumers to transform the way they make and receive payments. With that, it has also presented challenges when it comes to regulations, when it comes to data security, and there is a lot more that needs to be desired as we go ahead and process this type of volumes and transaction data on a daily basis. But one thing is for sure, that consumer behavior has definitely undergone a change post the pandemic. And that's the reason why we decided to hold this topic. And we have a bunch of excellent speakers today who are, in a way, movers and shakers, processing millions of transactions on their platform on a daily basis. So let me start with you, Shamvil. Your business is simple, but I don't think there is anything simple about it. Tell me a little bit about how consumer behavior and merchant behavior for you has transformed in the last 2 years with the pandemic.
I think it has taken a space shift, right, altogether, where pre-pandemic, a lot of transactions were offline, and there was a need for, there was a need for convenience, but was it truly met? There was a need for trust, but was it truly met? Some of those things became mandatory to solve for as we went into the lockdown, right? Like, I remember early parts of it where the world just stopped. And when the world just stopped, people panicked, right? And that is when the whole idea of convenience came in, where I need my groceries and I need it in the fastest possible time. Big Basket was running out of SKUs to sell, and you need the mode which is the fastest one to convert, right? And as the time progressed forward, what was super important was, as companies were stopping to accept cash, it was super important to build for trust and reinforce trust, right? And there are multiple things that companies did across the time period to make sure. And from a user standpoint, a bunch of them were very comfortable around cash, making sure that they tender it while the products were being delivered, right? Some of them were not sure if I get the goods and services delivered, and therefore I'll pay at the point of delivery and so on. So building for trust was one, right? Second was the whole convenience of things, where in a typical standard checkout, while you're waiting for your groceries to get a slot, and then payments fail, which was terrible. So having a reliable mode through which the payments could have been processed was becoming the de facto. And when you look over a time period, again, it compounded and becomes the de facto payment option that, hey, this allows me to have higher degree of trust and convenience on top. And therefore, this is my first choice of payment. And that's what we saw at Simple. And I think that enabled us to also think backward around, hey, this experience on few platforms was just not good enough. So we pressed the gas and made sure that the network was good 23,000 merchants strong in that time period. So across the network, that goodness could have been delivered. Please.
No, that's a great observation. And obviously, Zomato played a very important role in the pandemic as well, catering to so many important services. And consumers obviously fled to this platform given the nature of the service that you provided. My question to you, Harsh, is that how did you as a company cope with the sudden scale that you saw in that time? And what were some of the things that you did to improve consumer experience at checkout?
Sure. I think whether it's Zomato or any organization, consumer behavior when it comes to payments is one, there is a user choice that comes in, right? And that is in the form of what kind of payment methods I want to use, right? But I believe a lot of the consumer behavior in the payment space is also forced, shaped, modified by acceptance, right? I think that plays a critical role, and that is a combination of what the merchants want to present to the user, right? People like Zomato, Amazon, Flipkarts of the world, what payment method they want to tell the consumer that this is the best payment method for you to use in this context, right? And it's also a factor of how the ecosystem is changing and behaving, right? What's happening outside of the payments, key players. So people like Plural, PayUs of the world, Razorpays of the world, they also drive a lot of this in a lot of sense. Coming back to Zomato, in the pandemic phase, we saw a couple of things, right? We had to stop cash, and that was forced because of the peak of the second wave for the pandemic when it came in, right? And during that time, obviously, as expected, we saw a huge dip in the overall number of orders, transactions as well. But I think eventually, after the pandemic ended, it ended up doing great things from a digital payments perspective, because a lot of the users who were on cash before the pandemic and during the pandemic as well, they switched to digital. And almost half of that switched user base is still retained on digital payments. I think that's a huge plus. I would say there are hardly any pluses from the pandemic, but from a payments perspective, this forced a positive user change for us.
No, I couldn't agree more. And just like you, I mean, moving over to Anujai, yours has been a traditional brick and mortar, cash and check heavy collections business. What was the observation for you? How did you, and since you're responsible for such a large company's transformation into digital collections, what were some of the things that you did, and how was that transformation like?
See, you're right. We are one of the largest housing finance companies in the country, and traditionally dependent on the brick and mortar branch network that we have. So more than 150 branches across the country and outreach offices. And all our customer interactions, right from the pre-acquisition stage to post-acquisition servicing and collections interactions, were all dependent on either the branch network or at best the telecalling center that we have. Now, this pandemic and the lockdown that followed really disrupted our business model. What happened was, our customers are also accustomed to meeting our representatives in the branches or calling and speaking to us through the call center. And suddenly the branches were closed, and for the first month our business, the volumes just went down. So I'll give you two perspectives. One, the pre-acquisition side, and also the second, more importantly, on the post-acquisition side. The new customers, we realized that it was now becoming very difficult to connect with the new customers because we didn't really have a significant online presence when it comes to the acquisition process or the new home loan application process. And that's where we invested in technology. We transformed the entire customer onboarding process into a more user-friendly, contactless process using digital technology interventions. And I'm happy to share that in the last 2 years, let's say July 2020 onwards, we have onboarded more than 45,000 customers purely through the digital channel, which is close to 42-43% of the new business that we are doing. Now, coming to the collection side, again, pandemic has not been a good intervention, especially for our self-employed customers. And many customers started finding paying the EMIs a little more difficult. And that's where there are two aspects of technology that we leveraged. One, there were certain interventions introduced by the government of India. Things like restructuring the loan, making it more convenient to customers to pay. There are things like guaranteed emergency credit lines, which were extended to some customers who had businesses in hospitality sector and some of the other impacted sectors. And then moratoriums which were needed to be extended to some of our customers. And digital technology really played an important role in seamlessly extending these benefits to many of our customers. On the collection side, again, we were heavily dependent on checks in the erstwhile scenario, and now contactless was demanded by the customers. Customers were not comfortable paying through checks and cash. Cash was minimum, but checks was predominantly the most preferred payment mode at that point in time. And with time, now the significant volume of collections has shifted to digital mode. We have started accepting payment using the payment gateways like Plural, and there are other benefits being extended to customers in terms of they can now pay through links sent directly through SMS or through WhatsApp to them, and that has really played an important role in the overall customer experience that we can give to customers without visiting our branch, without the involvement of checkbook. They can still pay their payments on time.
Thanks, Anujai. And obviously, customer convenience being the biggest advantage that some of the digital payment solutions have brought to the fore, it also brings a very important element, which is making sure that the payments are trustworthy and secure. So, Shamvil, my question to you is, when you speak of convenience and the one-click checkout, which is obviously amazing when it comes to delivering this faster and in a much more optimized manner, how do you enable instilling trust in the transaction? And how do you make sure that consumers are educated enough to understand the nuances of why this is one click, and what are the redressal mechanisms that you could think of to make sure that new consumers who come aren't misled or misrepresented in any form?
I think it's a function of working extremely closely with the merchant side of the network, right? Because while payments itself needs to have that flavor of trust baked into it, but truly the goods and services are delivered by the merchant. So I think where it changes the game is when the merchant, where your payment instruments are put across, is one, integrated very tightly, so there's no slippages and gaps around, hey, what happens if the order callback does not happen, or a bunch of things which can go south. And the users at that point in time are not educated, hey, my payment failed, and if it did, when will I get the money back? One instance, and there can be likewise several others, right? Now the idea also is, how can you enable the merchant, work very closely, be a thought leader to them, and make sure that the building blocks of trust, which is at the time of payment completion, set an expectation on when will they get their goods or services delivered, or how about above in the funnel in the PDP itself, right? Or make sure that the payments that they are doing is safe and secure, which means they're comfortable enough exposing their CCs and DCs and so on and so forth by having the right security inline baked into that, right? Now, different merchants do it in different ways. Some have custom checkouts, which have a lot of PCI DSS and a bunch of trust indicators baked onto that, right? And I think when you look at Simple, what we do is just that, building for trust, where we say, hey, look, you don't have to tender exact change, or you don't have to expose your CCDC upfront. You just click on a button, and over a period of time, pay us back, right? Now, flavors of that are different, but what we truly call ourselves is a consumer experience platform, which enables trust to happen, because at that checkout point, you're not paying, the money is not leaving your bank account. So with a lot more control and trust, you can say, hey, I want this, I'm showing an intent to get this product or good delivered, and then I'm going to figure out the repayment part at a later point in time. Right? So that just bakes in trust at the point of checkout.
Now that's a really interesting point, because when you think about Zomato, you have so many kinds of customers who visit your platform every day. And when you think about different segments of consumers, obviously every consumer may not be suited for a certain type of checkout versus, something which is more traditional. Tell me a little bit about how you went about thinking through the payments checkout. Do you believe there is an opportunity to create a customized payments checkout itself, depending on what type of customers come to you? Obviously, you would have the data to make that assessment. And is there a need, therefore, to instill a better sense of trust in a certain payment type versus another? How would you go about it, or has Zomato done anything on that front?
Sure. I think people talk about trust as, something that you need to increase. I think trust is hygiene, right? From a payments perspective, if a consumer cannot trust the payment method that you're presenting, then you might as well remove it next time. From an experience perspective, I think the way to think, and that's the way that I've always thought about the checkout experience. It should be a part of a consumer journey where the consumer should not even remember when it happened, right? So it should be as close to that thought or a construct as possible, and therefore things like buy now pay later, wallets, they fit with that segment. But consumers also think about the risk part of the payment method they're using, right? So someone may not use a BNPL product just because it is convenient to use, right? There are other factors which are playing in the mind. From a Zomato perspective, I think a couple of things that we did was in the order screen, right? We used the real estate very intelligently during the pandemic phase, and when we started accepting cash, that's the time when it happened, right? We prompted users very, very clearly about the fact that you should always prefer to use an electronic payment and not cash, because obviously the pandemic is not over, although we have started accepting cash, but we would prefer that you use an electronic payment mode, right? So these are some of the things that we have done. I think a lot of innovation has happened since then. We now have a dedicated money tab on the app itself, and we do products in the financial services domain, which are presented and controlled by the user on the app itself, right? Not many players who do co-brand credit cards today in India provide those kind of controls to users that Zomato provides right now. So I think this journey has been great and a great learning for me personally as well.
I'm sure. And Anujai, to you, obviously your company, as you rightfully said, had to adopt a ton of online collection measures in the last 2 years. How has the amalgamation of now online plus offline worked for you? So ranging from, say, boarding of your customers to collections, are there certain types of mechanisms being differently used for one type of, let's say an onboarding piece versus a collections piece? You think online is better suited for one versus the other? How have you kind of amalgamated it now that, some time has already passed? What's been PNB's experience?
That's a great question, Tanya. I think for a company like us, for a business like us, an omni-channel approach or a hybrid approach is really important. It has in fact become a way of life now post-pandemic. I'll give you an example. Now, pre-pandemic, what used to happen was, let's say if customers' payments are due, so my collections telecalling team would have made a call to the customer and requested for a payment, and the customer would say, okay, I'll visit your branch and or a, let's say, a check drop location. I'll drop my check on so and so date. Now what is happening is once the customer confirms that yeah, he'll be able to make a payment by such and such date, immediately a payment link is sent. The customer can pay from the convenience of his home, right? He doesn't really have to visit a branch or a check drop location or anywhere else. Or he is also not required to meet anybody from the organization. So it has truly become contactless in that sense. And on the other side, on the new business acquisition side, again, it is still largely a pen and paper process, but we are trying to reach to a situation where majority of our customers are able to experience an application and customer onboarding process which is seamless, contactless, and also paperless now. So at least till the time of loan sanction, now we have used technology and data sciences to give an experience to at least some of our customers wherein they can not only apply for the loan online, but their entire underwriting, the loan underwriting is also managed without any people intervention, using some of these smart business rule engines and leveraging AI and ML. We can decision some of these cases, at least I would say 15 to 20% of the cases, we will be able to decision instantly, leveraging digital technologies. And then going forward, we are also trying to work with the regulators and other important stakeholders to understand if we can start disbursing loans also in a more digital fashion, because right now it is still a pen and paper and check-based process. But increasingly, we are trying to digitize the entire customer life cycle and solving each and every use case leveraging technology. That's where we are. Collections, again, is an important use case. My cost of collections, overall effort which is required to go out in the market and collect money from people who are not paying on time has significantly been reduced using some of these digital technology interventions.
No, and you brought in a very interesting point, which is cost of collections. Obviously, for each one of us, merchants alike, it is evident that the cost of collections moving online is much lower. And which brings me to the next question really is that now that in a way there is some semblance of what we call normal, are you believing that this is here to stay? And is this something that consumers are also adopting to, for at least for, not for good, but at least for the near future? Let me start with you, Shamvil. What do you think?
So I think what started off as a need has now become a de facto, right? Which is convenience at the point of checkout was a good to have, and now done multiple times it become that necessity. And the underlying factor to that is a lot of trust which was there while you were transacting offline. You could touch and feel the shirt. Now you can't do that digitally, but the way technology is evolving, the description tells you a lot more, the product cataloging and the photography around that is so much mature that you can almost see through what is happening. And then you have also tasted that for last 2.5 years, right? And you're accustomed to it. And behind that comes the whole trust again, which is on the payment mode that, hey, it's not going to be a surprise at the end of the day that, hey, I'm not getting my goods delivered or something goes wrong, because there's always someone who has kept you believing that we are there for you. And each time you came to us for that lack of trust somewhere in the system, someone was there to solve for it. So I think it's here to stay for a good long time. It has changed the behavior altogether.
And what you're saying is that consumers will do this if they believe that it is convenient and it instills trust. And for the merchants, obviously, and Anujai and Harsh both brought out the fact that it is far simpler to collect it so long as there is an avenue to collect online, and a lot of effort that companies have made to get there. So it's obviously something that they wouldn't want reversed. Let me ask you, Harsh, what's your take on it?
Sure.
How has it been now, even in Zomato's case? Are you still seeing the kind of transaction volumes that you were? And how's the uptick looking today?
Sure. So I think it's a no-brainer that digital payments as a share of overall transactions has been increasing consistently for past couple of months. And obviously, the growth that Zomato is seeing overall in the food ordering business. But I think coming back to your question about, or your thought about whether it's here to stay or not, I think that's not just a consumer question in my mind, because you don't know what will happen in the regulatory space tomorrow, right? Let me give you an example. Today, UPI is such a popular payment method, right? Even my coconut vendor accepts UPI, and I pay him like 100, 150 bucks every day in the morning, right? But imagine, let's say there is an MDR of even 0.5% or 1%, which starts getting charged on UPI transactions. Then the consumer cannot decide that unilaterally that I want to pay with UPI if the merchant is not ready to accept, right? So I think the overall ecosystem and the way it evolves will also decide how much of this is here to stay or not. There is an economic theory about there's no free lunch, right? Someone has to start making money on UPI. If it's not today, tomorrow, 3 months later, then the people who are providing this infrastructure service, they are enabling a great transaction method, right? They would also want to make some money out of this, right? So I think it's inevitable that there will be a pricing which will get charged on this product. I just gave a UPI example. I think it applies equally to all the payment methods. If the ecosystem does not make money, then it will collapse. If not today, then couple of months, couple of years later.
Yeah, and to your point, finally, if the merchant doesn't find it economical enough to accept this type of payment mode, it's a no-brainer, right? There is a reason why also transaction uptick on UPI has happened. And it's across P2P, across P2M transaction flow, and that's largely been because it has been free of cost. Now, there are many companies today who are also, in a way, leveraging or rather levying this convenience fee, as they call it, which in a way is helping them, or at least helping the merchant, not the merchant, but at least helping them recover the cost of infrastructure. I don't know whether it can truly be unanimous across the board, because there will be, as you said, small merchants who will not be able to afford it. But I agree with you, the time has come to rethink the way some of these charges have been levied, because there is a convenience associated with it, both to the consumer and to the merchant, and somewhere somebody has to pay for it. But over to you, Anujai. In your case, and obviously as a consumer, what is it that you believe? Where is this headed to? Is this here to stay?
See, in our case, Tanya, what happens is home loan is a extremely high involvement product. Most of our customers, they purchase a house and take a home finance probably once or twice, maximum twice in their lifetime. Since it's a high involvement product and at times the entire family becomes a part of decision making, we have to really ensure that our customers are getting a great experience in each and every leg of the processes that we have across the value chain. So, in my opinion, the change, what pandemic has got in the consumer behavior, especially when it comes to the convenience that comes with a completely digital way of managing our processes. I think these changes are here to stay. And I say so with a lot of confidence because it has reached a point where it has become a win-win situation. Not only for the customers, it is convenience, but as an organization, as a lender, it is giving me operational efficiency. It is giving me better reconciliations. It is giving me better reporting, timely, realization of the payments. So all these additional benefits will encourage us to keep investing more in the digitization of the entire process framework that we have in the organization, and the kind of convenience, the kind of great customer experience that it brings in the lives of the consumer. I am sure these change in consumer behavior are there to stay for a longer period of time.
You brought in this point on operational efficiency, and it's also linked back to Harsh's point. I mean, the fact that you're able to reconcile transactions much faster, the fact that you're able to get real-time reconciliation reports, and by the way, that also happens in a digital form of a POS device too. But that actually is a chargeable service. It is something that needs to be accounted for as a value-added service. And the day I think we are able to, as ecosystem partners, explain that to our merchants also, there will be that change of charging for enough and more when it comes to driving operational efficiency. And as you said, the convenience cannot be ignored. So it has to be, it is something that they have had to force themselves with, but I totally agree with you. It is here to stay.
Just to add to what you said, right? Think about the convenience to a user which Blinkit brings to the table, or what Zepto brings to the table, or one of these, right? 10-minute delivery without having an exceptionally fast checkout falls flat, right? Because the whole time taken to tender the change, cash, and then the reconciliation just adds up to too much of an operational inefficiency at the end of the day.
Oh, I am with you. I mean, there is a reason why Zepto is where it is today in such a short period of time, because of what they brought as simplicity in grocery delivery to consumers. And if you as a service provider were not able to do the same for them, yeah, there is something lacking there. So I totally buy it. And as an industry, as I said, we have to solve the problem of how to price this efficiently. Having said which, I'm really thankful for all the three of you to give your amazing insights when it comes to this particular topic. It's very, very clear that this change is here to stay. We as an ecosystem partner are extremely proud to have worked with each one of you in bringing that change and building the blocks of digital payments together. So thank you very much for that. I'll open the floor to questions if there are any.
So hi, my name is Sumit. I have one simple question. So why I started the simple? Because I heard it, when I order something on Zomato, then I'll get some discount. So put it my phone number and I got the limit. I'm really, so frustrating because the day, the limit I got, in till date, the limit is same. Because you can see my pattern. Because every month, when we use this simple, because simple is basically a faster checkout, right? And I agree with you, nobody wanted to put the, select the cash option and the card detail and all. I don't need the cashback, but I need the fast checkout because somewhere, in the morning, if I need milk and everything. But the limit is not sufficient. So we should increase. And in terms of the pattern, you can see my pattern because generally there is a 15 days of time period. So you can see that in a 5 days or 10 days I paid. But sometimes I required a grocery of like 5K and above. Then what should I do? Then in this case I have to shift this transaction into the UPI because limit is too less. So that is the thing. Thanks.
Thank you so much for the feedback. Means a lot.
Good afternoon all. My name is Pankaj Kumar. I want to ask one question. While collaborating with FinTech companies, bank generally outsourcing their financial services. Do the RBI or central government have any list or any strict regulation related to fintech companies that yes, I can say that these are the fintech companies who are the particular, important participant in the market, financial market?
I'll answer this for you. So, very recently, actually, there has been a regulation which has come out in terms of outsourcing of technology for banks, and who and what should be the prerequisites before you onboard any company, fintech or otherwise, for the purpose of managing IT services. So any company who's actually qualifying under that can actually help provide services, fintech or otherwise, to banking partners. When it comes to actually thinking through what is ideal and whether there's a list, the answer to that is most of the regulations today cover for a part of the fintech service. So whether it's payment aggregation, payment gateways, there is a regulation. People who qualify are qualifying for that piece of the digital payments infrastructure regulatorily with the RBI. You have the NBFC piece, you have credit cards, and you have associated services on top of that. Each and every component today is more or less regulated, and therefore companies who qualify for that license will be a qualified fintech player as per the RBI. And banks are most of the banks today operate with the fintechs as a technology service provider. And what I told you in the beginning, they need to qualify with the prerequisites that RBI circular has given. So there is enough and more checks and balances to actually evaluate some of these fintech companies who partner. As Pine Labs, we ourselves do that. We're a value-added service to many bankers, and another company of ours, which is Setu, also provides an infrastructure layer on top of banks so that they can integrate and create a much simpler form of integration for the bank's merchants or consumers.
I can add a point here. See, as a recipient of services from many of our fintech partners, and Tanya's got it absolutely right. There are frameworks, there are guidelines, there are regulations available. But as a recipient, on top of that, what we always ensure is for us, the consumer data protection is the most important aspect of that fintech engagement. So we really have a lot of stringent measures adopted in our evaluation process when we choose a fintech organization to understand how well the data privacy aspects are taken care of, how strong are the processes to prevent any data leakages are there in the fintech partner, in the potential partners, and through a detailed information security evaluation framework only, we select the right fintech partner.
Thank you for your question.